All right, guys, welcome back to another episode of the Black Bullion Show. Now, guys, I can't keep up with this. On Monday, I said, hey, maybe we'll get $20 by the time I upload that video on the 20th. And then we got $20. By Tuesday, we had already hit $21 by the time I even started recording that video on Tuesday. And then on Tuesday, I said, maybe it would be cool if we hit $22 by the 22nd. Then Silver basically says, hold my beer, and proceeds to edge closer to $23. Now, I'm just going to go out on a limb here and say, let's hope for $23 by the 23rd. Now, we may hit that before then, but I'm just playing it safe right now. And let's say let's say $23 by the 23rd. Now, there is a new possible reason as to why gold and silver have been moving so strongly recently. Now, I'm going to show you that towards the end of the video. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. It helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. So, this morning, gold and silver took a sharp nosedive around that 4 to 5 o'clock hour Eastern Standard Time, but then it quickly rebounded afterwards. So let's see if we can find a reason as to why that happened. So let's see what happened between the US and China, which sparked this sudden reversal. So I'm going to read this quick quote here. China on Wednesday condemned the U.S. decision to order the closure of China's consulate in Houston, which the U.S. State Department said was a move to protect American intellectual property and Americans' private information, a State Department spokesperson said in a statement to multiple media outlets. Now, I'm going to pause here because you guys might have heard about the US wanting to or thinking about getting rid of TikTok because of similar reasons to this. The idea of this company that has ties to China, looking into American data and private information. So this is kind of running along that same course. The article continues in saying, this came as relations with the US and China were tested further amid the Ronies. The U.S. Justice Department on Tuesday accused 2 Chinese hackers of attempting to steal data, including U.S. research on the Ronies shots, on behalf of the Chinese government. China vowed to retaliate against the forced consulate closure. China's foreign ministry spokesperson Wang Wenbin said in a briefing Wednesday that China intended to react with firm countermeasures if the decision was not revoked, according to a Bloomberg report of the briefing. The development sent global equities and contracts on the S&P 500 and Dow lower Wednesday morning in New York, and both indices fell modestly as markets opened. The Nasdaq held slightly higher, pairing some losses from the prior session. So, why did this impact gold and silver so much? Well, pretty much, I've got 2 words for you. The US dollar. Now, essentially, the dollar rose and the euro fell. However, I don't think anything too much about that quick rise in the DXY and dip in monetary metals, because pretty much the overall trajectory for the dollar in the near and medium term looks pretty poor. Check this out, actually. This article from CNBC. Gonna read this quick highlight here. The dollar was weakened earlier in the session by concerns about a possible delay to U.S. fiscal stimulus as the Republicans and Democrats struggle to reach a consensus on the next round of economic stimulus measures. Somehow, everything looks a little better for the euro than for the dollar. 1-0 for it in the fight against the Ronies and the recession. So people are looking more towards the euro as the possible bastion of light because of the European or the Eurozone's historic stimulus that was put out. The article continues in saying, MUFG strategist Derek Halpenny noted the dollar had weakened sharply in 2010 to 2012, which was also a period when real U.S. Treasury yields were falling sharply. We are a long way off another form of hawkish guidance like May of 2013. So new lows in 10-year Treasury yields look likely, which will only reinforce the medium-term negative outlook for the dollar. So remember, yesterday we spoke about the euro giving the dollar a hard time with the announcement of the EU stimulus bill. And because US talks have stalled a bit, the dollar has also, been struggling because of that. However, I'm curious to see if the dollar will strengthen temporarily as the euro did once we pass our stimulus bill. I mean, we'll have to see, but let's see, what happens with that when that occurs. And that's to happen before the August recess, though Nancy Pelosi has been on record in saying that if they don't pass this before the August recess, she's considering just, delaying that recess period. So we'll see how that turns out. Let's also take a look at some of the economic data that we got today. So at 10 a.m. Eastern Standard Time, we got the existing home sales data for June. Now, there was a huge surge, and it seems like a lot of urban areas are being left in the dust for small towns and just in general suburban life. Now, just a quick aside, I don't really understand why everyone would be buying homes right now. I can understand renting them, but buying them right now at the top of the market just seems insane to me. But, that regardless, we'll talk about that on another day. The 21% surge in existing home sales did impact gold and silver, but it wasn't by a lot. Now remember, this is around 10 a.m. Eastern Standard Time. There was a little bit of a dip here, and then we jumped right back up. Silver wasn't really too worried or too bothered by that. There's barely a dip before getting back up there. Now, you can just basically see just the overall trajectory for gold and silver is just like the wind is in the sails of the monetary metals right now. I mean, today is a pretty choppy day in general, but the trajectory is looking pretty good. But I think we found an additional reason as to why this trajectory is looking pretty good. Now, this new one comes from Kitco, and it's entitled, "Are Gold and Silver Prices Benefiting from Margin Trading Out of China?" So again, got another spotlight on China today. And I quote, "Very bullish price action in gold and silver might be pointing to a new driver behind the move upwards, according to TD Securities. While market participants have noted that large stops have likely been triggered behind the surge in volume," remember, we've been talking a lot about volume and SLV, "the congruent price action in both silver and gold suggests that an additional driver may be contributed to the sharp rally." TD Securities commodity strategists say, "We have simultaneously noted a recent rise in margin trading out of China, which has rekindled memories of the explosion in margin trading during the 2015 equity market bubble." Now, for those of you who don't know, margin trading is when an investor invests in essentially more stock than they can afford. This can happen by having a broker lend you money so you can buy more shares, and then they use those shares as collateral. So everyone, that was your Wednesday. Let me know if you think that China, with their margin trading, is driving some of this precious metals rally at the moment. Also, do you think that we'll get $23 silver by the 23rd of July? Let me know in the comment section below. Thanks again for watching. Please hit that like button. And also, if you're new to this channel, please consider subscribing because we have a pretty active community as of late. But yeah, thanks again for watching. Really appreciate your support. Let's get silver up to $23. All right. Have a good one.